So on the left-hand side, if we begin on this quadrant here, when we first, let's say, I think the most easy example is go ahead and let's go back and use our tennis analogy. We first begin, and you pick up that racket. You have no idea what you don't know about tennis, right? You just don't know what you don't know. You don't know the difference between the different grips between a forehand and a backhand. You don't even know how to string a tennis racket in terms of what poundage you should be using for your string, all those kinds of things. So you're completely unconscious around your levels of incompetence. When you start to play a little bit of tennis, and you start to watch others, you begin to become aware that, wow, there's a lot I'm not good at here. There's a lot that I'm incompetent at. So at this point here, you've already made some progress. Now you're consciously incompetent. Okay, so you're aware that you lack a skill. From there, if you apply yourself, then you can begin the skill development process, right? You can go through getting better at tennis, but really, you can still only play at a high level when you really, really think about it. So if you really want to deliver a good backhand, then you really have to focus on your form, your technique, where your feet are, where the ball is, what your opponent's doing, and that has to be really done at a high level of consciousness. Now, with enough repetitions, then you can get to the level of unconscious competence, where it's a skill now that you don't even have to think about. You just get on that tennis court and you play. You've mastered that backhand at a very high level, and it just comes out now, and you don't even think about that skill anymore. All right. So trading is can very much use this same model, because trading is a very, very interesting performance endeavor, because trading consists of a number of different skills, right? So if you think about trading in its entirety, there are some skills around technical capacity and know-how. So technical, I don't just mean technical analysis, but I mean things such as understanding different markets, different instruments, understanding things like risk methodology, understanding kind of the mathematics around trading and all those types of things. There's the fundamentals of trading you need to think about. There's the tactical pieces of trading, like how do you enter an order, how do you manage level twos, how do you work with different stops, those types of things. There's the mechanical part of trading, so actually using having the wherewithal to use your charting platform, entering orders quickly, and then there's the actual psychological / mental and emotional parts of trading that is also a skill, right? So how do you stay and maintain resilience after a bunch of losses? How do you deal with drawdowns? How do you deal with maybe a fear of not being able of being wrong? All these types of different mental game issues. And so if you think about all those different skills, you can overlay them on this sort of bell curve, right? So if you were to actually categorize all your skills, you would see that there's a real bell curve distribution of those skills. You would have some skills at the area of average, weak. You'd have some skills, or maybe the bulkier skills would be kind of in the average category, and then you'd have, again, a small number of skills in the strong category. Okay, and that's kind of the average distribution of your strengths and weaknesses. And by using this framework, we can begin to construct a methodology around how we can consistently improve. And the way we can consistently improve is by taking one step forward from the front of that bell curve, right? So from the strengths go forward, but also the bell curve is moved forward from the back. That means your weaknesses are going forward from left to right. Okay? And these are the implications. So if you do those things, that means improvement can happen from both sides by improving your weaknesses and improving what you're best at. So we're not going to put our heads in the sand and pretend we don't have any weaknesses. We're countering that myth by improving both those areas. Number two, our trading, in terms of what our best trading looks like, is always a moving target. So you may think you're a good trading now, but you can always get better, because our best is always relative to where we are in that range and development. So by simply, as you've maybe seen this in your own results, by simply cutting out some of your worst mistakes or your worst trades, right? How much better do your results get? right? It's as simple as that. Now, what if you were actively now working on all those weaknesses at the same time as actively working on your strengths? Can you see how powerful that could be? So that's the idea. And thirdly, you create the potential for even greater capability. Oh, excuse me, well, my mouse went a little bit wonky there. Let me just go back. You create the potential for even greater capability and capacity because you're kind of freeing up your mental energy that's being taken up by holding on to some of these trading weaknesses. So, what we talked about in the past is that these trading weaknesses oftentimes act as an anchor to your development, right? They're actually taking up mental space. And so when you can release those things, when those things no longer act as a drag, you actually free up your capacity to learn new things at a quicker velocity. Okay? So let's show a graphic on how most traders improve. Right, so this is the graph I just showed you from a few moments ago about how we basically could categorize all of our strengths and weaknesses on that bell curve. But here's how most traders try to improve. Right, this is what they do. They only focus on their strengths. So what happens? Well, what do you see here? It's flattening the bell curve. Right, so all they're doing here is that they're pulling their strengths further to the right. The averages are going down a bit, but the weaknesses are still there. So all you're doing here now is you're creating a longer and longer bell curve that's getting flatter and flatter and flatter. And so what are some of the consequences of this, right? So if you don't improve from both sides, what are some of the consequences? Well, here's the 4 things that can happen. Number 1, if you don't improve from both sides, your trading your best takes a lot of energy. Excuse me, I clicked on the mouse again and it shifted things. I apologize for that. It takes up a lot of energy, and that's because you're having to drag all those weaknesses with you, right? So just because I'll say it this way, if you don't focus on those weaknesses and you neglect them, they're still there. But what you're doing now is you're playing defense. You're constantly working around those weaknesses, just like in the tennis analogy, right? Just because I don't work on my backhand doesn't mean it disappeared. Yes, I can run around the shot and try to hit my forehand, but then I'm using up more energy, right? Because I'm having to run around the ball now because I need to use my forehand instead of using the more efficient stroke, which is the backhand. Number 2, when the mistakes do show up, which they inevitably will, many of these even basic mistakes, they'll come up completely out of the blue and catch you completely flat-footed, right? Because when you don't develop your weaknesses at all, they're so underdeveloped that you don't even see them coming. You have such a low level of awareness around them, such a low level of recognition that when they do pop up, they cause havoc in your trading. I think, I've seen it many times, and maybe people on this call can relate, that, if you're trading and all of a sudden you lose your temper, you lose your cool, and you explode, and all of a sudden you lose control, and you start, over trading or start trading too large, or start trading impulsively, then something's happened there. Right, you have this weakness, something that triggered you, that caused you to go, into quote unquote tilt. This is a term that poker players would know, and might be able to relate to if you play poker. And so that's the thing, right? So mistakes will show up out of nowhere if you don't spend the time to raise your level of awareness around your weaknesses. Number 3, you're going to feel like your trading's plateaued, right? If you're only working on your strengths or things that feel good to work on, guess what? Your trading is going to plateau very, very quickly, because when you're really, really good at something, it takes a lot of effort to get better at that thing. All right, so I want to use the same analogy again. If I'm playing tennis, and I have an amazing serve, maybe I can serve, say 100 kilometers an hour, right? But I still have a bad backhand. But if I spend all my time still working on that powerful serve, I may be able to get it up to 105 kilometers per hour with, hundreds of hours of training, right? I could probably get 5 extra kilometers. Now, if I were to apply that same 100 hours to working on my backhand, guess what? That would improve a lot more rapidly because I've underdeveloped that. Lastly, number 4, when you don't improve from both sides, you have a lot to think about, and you often get confused, uncertain, or miss key details. I'm sure most of us can relate to this. We've probably all been in a situation where we've been in a trade and we got stressed out, or something happened during that trade, and we got confused. Right? We didn't know what to do anymore, and this is because there's a great deal of uncertainty because we haven't focused on the areas that are gray. Right? We wanted things to work out, and we focused on the great outcomes, how we wanted things to play out, but we didn't spend the time to actually work through what would happen if various different scenarios played out. And so what happens? Well, when these things do occur, we're kind of in no man's land. We get lost and we get frustrated. Okay? So now from this framework, we can begin to apply one more framework that I'll share with you today, and that's this simple performance framework, right? So now that we understand how to categorize our skills, we can use a basic framework like this one to begin to create the appropriate feedback loop so that we're working and performing the right types of practice on those different skill types. So a lot of people focus just on the results, right? And that's not enough. We want to be focusing on all these areas. First off, we want to prepare by doing a very solid warm-up. So like any performance athlete or any performance star or any performance actors and so forth, they would all spend some time warming up, whether it's stretching their muscles, stretching their vocal cords if they're singers, stretching their fingers if they're piano players. There's some sort of warm-up that needs to occur to prime ourselves for performance. Then we can get into the performance itself. The performance will then yield the result, right? From the result, we will now launch into our evaluation or cool down cycle. We will then take the results, interpret them, evaluate them in a cooled process, right, where we're no longer in active participation mode, and then we can not analyze that from a more detached place. That analysis will yield some new corrective information, maybe some tactical corrections we need to make, which will then feed back into our warm-up loop again. And so you see this virtuous cycle, right? This is kind of that loop that we want to be creating for ourselves. And the tighter and the shorter feedback loops you can make, the faster you're going to be able to learn something, right? The faster you're going to be able to learn the lesson, create the correction, and then, sorry, the mouse is jumping ahead of me here. The faster we can add it to our warm-up loop and into our actions. So let's just do a quick exercise. And I'm going to go really fast because I'm actually going a little bit slow today, so I want to be mindful of our time. I'm going to share with you 3 steps, and I want you to do these things, maybe not right now, but take this one with you today, and over the course of the next couple of days, maybe over the weekend, spend some time and just do these simple steps. So number 1, ask yourself, what does your best trading look like? Okay, so in your mind, when you're trading your best, what does that look like? Second, what does your worst trading look like? Okay, so when do you just trade like an idiot? Right? When are you trading your worst? What does that look like? What are you doing? What physical things are you doing? What physical things are you thinking? How do you feel? What emotions are being triggered? Right? Now, overlay that on top of that conscious competence model. Okay? So take those things and begin to apply them onto that model that we talked about before, so that you begin to have a very, very good assessment of your current range of skills. All right? Because your role moving forward is to begin to cultivate all of your areas of trading. Okay? So we talked about it already, but here's the process one final time. All right? So we're going to do that warm-up. We'll talk about I'll share with you what I do in terms of my warm-up, and then you'll perform. So that is, a warm-up prior to our trading day. We'll then perform. That's our trading day. And then in the cool-down process, we'll evaluate the results. That'll then feed back into our warm-up process for the following day. Okay? And that's how we create what I like to call this kind of virtuous loop of feedback, this virtuous cycle of performance. So let me share with you now some of my trading routines. And again, the whole point here is to create an intention around getting better on our strengths and our weaknesses. Okay, so this is what I do every single day. because I trade every single day, and this is what my kind of warm-up routine looks like. So prior to showing up to the trading day, I'll do a number of things. I talked about it in another podcast and in my blog, about my kind of my personal warm-up, which is like around meditation and that kind of stuff. But this is just around trading. So number one, I'm going to set a game plan for myself. I'm going to review my long-term goals and the goals I have for the session. So I'll be thinking of, based upon where the market is, trading in the pre-market and the stocks that are kind of moving around the pre-market, I'll have a number of scenarios that I think that are possible for the session. And, I'll construct for myself some goals for that session. There's always some things that I'm working on that I'm trying to improve on, against strengths and weaknesses. And so those things I have, I have a number of process-oriented goals, performance-oriented goals, and outcome goals. I think it's important to have all three, right? So if you haven't heard that before, process are the things that you would do, right? So what things you need to do during this trading day, for instance, right? So, one process goal that I have, like I always keep top of mind is, right now I'm working to improve my win-loss rate. I want to get up to 80%. So, there are certain setups, or there's a certain way that I need to be, I'll say it this way. There are certain criteria for the setups that I really want to be taking, and so I make sure that, when I warm up, that process of taking that ideal setup, that I'm priming myself for that process. Okay, performance goals. Performance goals is, I'll give an example of one of my performance goals. I want to have less than 2 unforced errors a day. Now, believe it or not, everyone makes mistakes, right? Even the best of the best traders in the world, they make mistakes every single day. Okay, so if you can keep the mistakes down to a minimal, I call them unforced, meaning there is, nothing caused that error other than, than a mistake that I made, right? So I want to try to keep unforced errors to less than 2 a day. That's a performance-based goal. And then an outcome goal would be something like, I want to make $5,000 today or $100 today, whatever that outcome might be, or I want to get a 50% winning percentage, or, whatever that number is for you, right? So that would be an outcome goal. But I do think it's important to have all 3 types. Okay, next one, I'm just going to speed up a little further here, is you want, in the warm-up stage, you want to be reviewing a list of all your common mistakes, right? So having the recognition that, what, I have the propensity of making these types of errors. I have the propensity to be able to trade a certain way, whether good or bad, right? And having that picture in your mind allows you to pull it up more quickly, so that during the trading day, when you start trading really poorly, as an example, you can say, uh-oh, you can catch that before it gets out of control, right? So maybe, you've lost 2 trades in a row. And historically, when you lose 2 trades in a row, it tends to cause you to get a little bit frustrated, which tends to cause maybe impulsive trading, all right? Well, in that case, if you recognize that behavior in yourself ahead of time, you can catch that in real time, right? I love that saying that says, between stimulus and response, there's a small gap in there called choice. And being able to make a good choice is based upon us having the context already in our heads ahead of time, so that we know what that looks like, so that we can then choose the right behavior, the right course of action. So it's very, very important, again, to prime yourself ahead of time to understand what your best trading looks like and what your worst looks like. Okay? If you have any goals or corrections that you're working on, review that in terms of, your mental game issues. Right, so if you find yourself getting fearful at certain times in the trading day based upon a certain number of losses, or based upon a certain type of market action, maybe if the market sells off aggressively, you make bad decisions, then understand like what's causing those mental game issues. Are you worried about losing money? Are you scared of missing out on a move? Are you scared of being wrong? These things you need to understand of yourself ahead of time before the day begins. Priming. We talked about priming already, but for me, this bullet point means priming technical patterns. I'm a price pattern trader. I'm fairly minimal indicators, but I'm a price pattern trader. So I prime myself with the number of patterns that I want to be thinking of, so that when I see them during the trading day, that it's second nature for me. I'm not seeing that pattern, quote unquote, for the first time. Okay, and finally, self-regulation. Use deep breathing, meditation, whatever's best for you. I've talked about this in the past on some of my blogs and podcasts, but there's definitely depending on your individuality or what you like best, different ways for you to start the day off right. So make sure that when you enter the trading day, that you're in a good place physically. Okay. And I missed this one bullet point. Perform a set analysis, and I'm just going to talk about it. I don't have time to really go into it, but set means sensations, emotions, and thoughts. So before the trading day begins, just quickly reflect. What am I thinking right now? How am I feeling? And what are the what are some of the emotions that are bubbling underneath the surface? Okay. Finally, the cool down process. So this is a very important step, and I think one that's I think a lot of traders, they warm up. That's it's great to see. Probably in the past few years, I see a lot of people sharing their warm up routines, what they do pre-market. I don't see a lot of people sharing their cool down routines. What are they doing after the market closes or when you decide to stop trading? How are you now evaluating that experience that just happened? What are you doing to detach from the results so that you can begin to learn some of those lessons, and most importantly, so you can begin to release some of the emotional baggage that you always accumulate during a trading day. Like, I don't care how good of a trader you are, trading is an emotional game. And so if you don't do the cool down process, then what I see happening is this idea of accumulated emotions that build upon themselves day after day after day, which eventually just kind of boil over and then bleed into trading. So the cool down process for me is as follows. First off, I estimate variance, and this is an idea that I got from a poker coach named Jared Tendler, and he has some good ideas around that. But understanding the variance of the markets is what I'm using as this concept. Is that in trading, there's a large amount of randomness. No matter how much back testing or how sure you are about your trading setups or your price action techniques or whatever it may be, there's still a large degree of variance or randomness in trading because it's just because there's millions and millions of traders out there, millions of trades that are going on. So oftentimes you can do everything right and still lose money, right? Not necessarily wrong, but you can still lose money. And so in that case, your process may have been right, your performance may have been right, but the outcome, if you wanted, made money, you were wrong on that one, right? And that was entirely based on variance, nothing to do with you. So in that case, you don't want to beat yourself up over those things. And so a lot of people, they don't have the ability sometimes to recognize that, what's actually going on here is there's some variance in the markets right now. Maybe you're trading too illiquid of a stock. Maybe you're trading at a time of day where there is just too much choppiness or randomness. So you need to begin to develop that skill to say, all right, was it me or was it the markets, right? And if it was the markets, let's categorize it further. What kind of markets are we talking about that that lead to these inconsistent or randomness, these levels of randomness? Secondly, I then evaluate how I traded. How did I trade today, right? So both my technical, the technical part of it, and the mental part of it, and areas that I'm trying to improve. And I will actually go insofar as assign a grade to those different areas that I'm working on. So at any given time, I'll have 3 to 5 things I'm working on, and I'll grade myself on that. I have a 1 to 10 scale, but you can use whatever scale you want to grade yourself. But I grade that because every single day that feeds back into my warm-up loop, right? So if today I give myself a 4 out of 10 on, let's say, spotting really good setups, then guess what? When I'm reviewing this today on my cool down, I need to prioritize that for the following day. So my warm-up, I see that yesterday's grade was a 4. Well, that's clearly not acceptable because if I keep this up, then I will get into big trouble because eventually my percentages will degrade. So I want to be assigning myself a grade and then and taking those things seriously, right? Nextly, if I had any mistakes I'm trying to fix, did I fix those things? If not, why not? What did I do well? It's very easy to get negative on ourselves because we're actually kind of negative-based machines. We actually have far more negative ideas or thoughts than positive thoughts. So I definitely want to spend a lot of time also congratulating myself or appreciating things that I did well in my trading. Because if you do what comes naturally, you'll probably have a list of like 10 things you did badly and maybe like 3 things you did right. Right? So, just do yourself a favor and give yourself lots of things you did well. So what did you do well, right? Did you show up with a lot of energy? Were you resilient? Did you show up consistently? Just give yourself things you can be proud of for doing that day, because that will create that kind of upward momentum for yourself to keep this process going, because you don't want this process to feel bad, right? For me, it actually feels fun. So I hope you get that out of this process. Okay, and the second last one here is, what trades made me think really hard? That's a really, really good question, right? It's not the trades that I lost the most money on or the trades that I made the most money on. It's which trades made me think really hard. And those are my areas that I'm having discomfort, right? So those are where the lessons are. So that's where I need to be applying myself. And is there anything I could have learned that in this session? Okay, and I mentioned already, I take all these things, I refine them, they get incorporated back to my warm-up loop the next session, so that we create this really tight feedback loop. The great thing as as an intraday trader or a day trader is that I have very, very tight feedback loops. Every single day I have a new feedback loop, right? So I have a very, very tight feedback loop where I'm constantly spinning up and getting better and better and better and creating that kind of nice spiral upwards. For folks who trade less frequently, then your feedback loops are going to be a little bit longer, right? That's just the way it is. If you trade let's say you only take 1 trade a week, well, guess what? You may only do one of these warm up and cool downs a week, right? So you can see how much longer that's going to take for you to learn some of these lessons. It's not impossible, but it's just going to take more time, right? So you can see that if we were talking about 10,000 reps, I would get my 10,000 reps a lot more quickly because I'm an intraday day trader versus a person who takes 1 trade a week, right? And finally, I talked about it already, so I'll just touch on it now. Do some time to do the emotional release work, right? So this idea of accumulated emotion, I think accumulated emotional baggage is a very, very, very important one. I think a lot of people neglect it, and it bleeds into, it bleeds into your trading and it bleeds into your life. Right, so if you don't spend the time to do things like journal, meditate, do things like emotional release therapies, I did a podcast about that several podcast episodes back. But if you don't do that work, then excuse me while the dog barks there, then you will have an accumulation of emotions, and that will affect your life. And you don't want your trading affecting your life. Right? That's unnecessary. So do the work and sort of disentangle yourself, detach yourself from your trading. Okay, so let's move on now to the announcement. So we're going to begin to wrap things up here. I'm going to share with you this announcement, and let's just go over a couple of points first. So why did you attend this webinar? Well, I think for most of you probably attend this webinar either for one of these 3 reasons. Number 1, you want to become a full-time trader, but recognize there's probably still a lot more you need to learn, which is a theme we've talked about over and over today. Or perhaps you're frustrated because you just haven't found the success you want yet with your current methods. Or maybe thirdly, you're a good trader, however, your results simply don't match up with your skills. And these are comments I hear a lot of in my coaching and through the work I do with my meetup group. And so I'm really pleased to announce that I'm finally rolling out my latest coaching program. It's something I've been working on for the past couple of years. Actually, I actually put it on a bit on the shelf to actually improve it. But I'm rolling out this new program called The Keys to Your Trading Business, and it's an interesting program because it's kind of all the lessons that I've learned over the past 10 years, and I've incorporated into this large kind of 3-month business program. And it's a little bit different from your traditional trading programs. It's not just about sharing setups and technical analysis patterns and all that kind of stuff, because what I think a lot of traders miss out on when they're putting together their trading business is that trading is a business, right? And so they miss out on the whole fact that you need to be running this operation of trading as a business. So with this program, it's going to teach you how to structure a profitable trading operation, how to create a business and a trading plan. Some of the key elements around, of course, having the right mindset or having the right roles and responsibilities that you have to play as a person who owns a trading business. I'll share tools and some of the routines that I use day in, day out, as well as some of the setups that I employ on a day-to-day basis. So, again, as I said, it took me, a couple of years to put this thing together, and I'm very, very sure for the folks who do try the program, it'll probably shave, hundreds of hours or tens of hours off of your learning. That's the thing, and I think about my journey and how long it's taken me, and it's taken me 10 years. It's not so much the money that I lost along the way that hurts most in terms of becoming a competent and a profitable trader. It's more of those hours that I spent, right? I probably spent hundreds, probably thousands of hours that I just can't make back. I was kind of in that no man's land for a long time because I didn't have the right structure in place for my trading. So in a sentence, kind of the keys to your trading business is a complete kind of A to Z system that gives you strategies, tactics, and mentorship to create a profitable trading business. And just to get into a little bit deeper, in the actual system itself, I'll give you a system. So that's a trading system, methodology, so that's around risk management, mind and psychology lectures, and know-how. So I share trading setups, trading habits, as well as some market techniques and analysis and kind of the predictive patterns that I use in my trading, as well as tools and resources. So at the end, you'll learn how to structure your trading business. You'll understand how the different roles and responsibilities you need to own up and play. How to create your own trading playbook, so that at the end of the day, you don't have to rely on me to be your quote-unquote guru. You can go off and begin to do create your own trading plays and trading setups. And lastly, just begin to have the ability to create lasting change in your own trading behavior. So I see a lot of people, they know what they need to do, but they just can't seem to do it. And that's because they have a little bit of a hiccup around changing their behaviors. So finally, all these tradings are available now. They're 100% online. It comes with 20 plus videos. You get direct email support from me within 24 hours. As soon as you email, you can ask questions, support. I give you encouragement. There's templates and worksheets in there. And we also have a Slack room set up. So Slack's that really popular chat room where we can actually collaborate and actually trade real time together intraday. And for the folks who do purchase that package, I'm also giving away lifetime access to my Embodying Peak Performance course. That's valued at around $200. And best of all, it's a 30-day, 100% risk-free guarantee. So if you buy it, you don't like it, you can play for 30 days, no questions asked. If you don't like it for whatever reason, I'll refund you 100%. All right. So just to go over it really quickly here, the investment is $595. For the full course, you get the full course. That's the full 3-month course. It has, again, about 12 modules in it with, again, 20 plus videos. There's also a mentorship option as well. So for $895, you get the full course plus 2 60-minute coaching sessions that you can use anytime you want. So you can schedule time anytime you want, both based on our availability, and we can either go through the contents of the course, or better yet, as you go through the course and you run into maybe bumps in the road with your trading, we can begin to use, again, the mentorship to get you over some of those bumps, some of those hurdles. Or the last package is the full course plus 4, which is simply the same full course, but with 4 coaching sessions. So if you want more details, just go to the link below, thetradingedge.org/go. And I do want to announce just one final special offering today. And because I'm rolling it out this week, there is an early bird special. So for the next week, from now until the 22nd of December, there's $100 off. So right now, everything's $100 off the initial prices I just showed you there. So $495 for the full course, $795 for the full course plus 2, or $995 for full course plus 4. So I think that's an exceptional value. And again, just so in the past when I just did a one-to-one coaching, I was charging about $250 an hour. So here you have the option of mentoring, and you get the full course thrown in basically for free. So I think it's an exceptional deal. All right. So hope you take advantage of that before Christmas, and Santa gets that for you. All right. So that's I'm happy you stuck around to hear that announcement. Let's get to the giveaway now. So it's giveaway time. So here comes the giveaway, right? So The giveaway, once again, is this 6 Keys to Embodying Peak Performance. That's the course I just mentioned a few moments ago that you do get as part of the Keys to Your Trading Business program. It's valued at $199. So based upon the folks that are on the call, I'm just going to do a random drawing. You know what? I'm just going to literally, I have in front of me here all the names. I'm just going to I'm not going to look. I'm just going to basically point my finger at the screen, and then whichever name I'm pointing at, it's going to get the prize, okay? So that's going to be, it's not a very scientific drawing. It's not a random number generator, but I'm just going to do it on a field basis. So I'm going to close my eyes. I'm going to point to a name here. All right, 1, 2, 3. All right. And, okay, Martin or Martin. Your email ends in yahoo.ca. You are the winner of the course. So I have your email address. I will email you after the session here that ends in the next couple minutes, and you get access to the course. All right. So thanks for sticking online, and congratulations on winning the program. Okay. So that's Martin Thirault, I think the name. All right. So one final slide, and we can wrap things up. And again, I want to thank everyone for showing up today. And we've gone to the Q&A portion now, but I do want to share one final message here, one final quote, because I think it's an inspirational one. And if you do have to leave, then I thank you for your time today. But I do want to leave you with this one quote before you go. The quote is, the greatest predictor of long-term success and is learning and improving every day. Let me just say that again. The greatest predictor of long-term success is learning and improving every day. And that, there's no more suiting quote than that based upon what we've been talking about our whole session here. All right. So, as I mentioned, if you do have to go now, then thank you once again for coming out. This recording will be sent out in the next day or so. I do believe we had a bit of an issue with the recording. It sounded like the recording only kicked in about halfway through the presentation, so I apologize for that. But I will include the slides as well, so that you will have that as information, so that you can begin to do your own, coaching or skill development work to pick up to work on your strengths and weaknesses. All right, so let's open it up Q&A for the folks left on the call. Go ahead and type it into the chat pod, and we can begin to do some Q&A here. Okay. So we'll give it a few moments, and we'll open it up for Q&A. And I'm just going to review some of the questions that have been left here while we were in the webcast. Okay, I got a couple of questions. I'll give it a few more moments here to see if we have any other questions. Okay. So let's start off. I have the first question I'll take is a good one. My question is, in your experience, what is the best method of practice for a day trader? Actually, this question, was sent in ahead of time. So thanks, Trey, for sending this one ahead of time. I made a note to answer to first today. So the question is, in your experience, what is the best method of practice for a day trader to change behaviors such as exiting a position too soon? Very good question, right? Who hasn't had that happen to them before? Who hasn't exited a trade early just to see it, rocket up, as soon as we got out of that trade? So this is a very, very common behavior, right? And it's a behavior that is somewhat layered, so it's kind of hard to there is no easy fix for it. Okay, so here's the way I would go about diagnosing and kind of resolving this this issue. So first off, you're gonna have to do some work, just understanding the problem itself. So first off, you have to kind of describe to yourself the problem, and then I'm gonna share with you some steps so you can become your own trading coach here, right? So here's how I would approach the program. Okay, so first describe the program. The problem. Why does it make sense that you act this way? So if you have a tendency of cutting your winners short, why do you act that way? See? Because somewhere in here, there's a belief that you're carrying that this is the right thing to do, right? You're acting this way because there's a part of you who thinks that it's in your best self-interest. So somewhere in the past, taking quick profits actually made sense for you. You actually got rewarded for that. Okay? Now you have to begin to deconstruct things. Now think, why is this thinking flawed? So why is taking profits quickly flawed? Okay, so what we're doing here is we're recognizing why we want to act the way we want to act, but now we're thinking, well, why is this thinking not correct? Because once we get to that place, we can then come up with the correct action. Okay, so then we can think, well, what's the correct action? And then finally we can ask ourselves again, why is it correct? Okay, so think about it this way. Let's work through it together. If I'm taking my profits too soon, why is it that I'm acting this way? Well, it could be that in the past I was able to book wins and feel good about being right. Right? So yes, I didn't get any home runs, but as the saying goes, nothing wrong with taking profits. Right? So maybe in the past, taking small profits was actually beneficial because it allowed me to clock some winners and make some small profits. Now, why is this thinking flawed? Well, clearly, Trey, who asked the question, understands why the thinking's flawed, but you need to talk it out still. You need to write this down and actually physically work through it. The reason why it's flawed is because, obviously, if your winners are too small, you cannot recoup from your losses. The only way to recoup from losses is by having large winners. Otherwise, if you're going to have a lot of small losers, then your win-loss rate has to be very, very high, which is oftentimes very difficult to do because sustaining a high win-loss percentage is difficult. So what's the correct action? Well, the correct action is I need to let my winners ride. That means I cannot take profits. I cannot fall into taking quick profits. I have to simply trail my stop or use some trailing method approach, whether it's parabolic SAR or some sort of ATR-based approach or whatever methodology you want to use. And I need to stick to that course of action. Why is that correct? Because in the long run, I'll make more money. In the short run, and in times where there's variance, I may actually lose more money. I may actually lose money or lose more money in the short run. But if I've done my homework and my trading system and methodology are sound, my risk management is sound, then in the long run, I will make more money. That's why it's correct. Okay, so you see how I'm kind of talking myself through this? That's kind of the approach I would begin to use to understand the problem. So now that I understand the problem, then we can begin to actually feeding this into our warm-up process. Right? So when I begin the trading day, I'm going to be using that warm-up process. Right? I'm going to be setting intentions. So during the trading day, I'm going to give it focus, I'm going to give it attention, and I'm going to give it recognition. So I want to, again, prime myself. All right, I have a tendency during the trading day. This is during the warm-up process, right? I have a tendency during the trading day to want to take profits early. I'm going to recognize that myself, right? So during the trading day, when that happens, I'm going to catch it ahead of time. Before my button hits sell and I get out of position, I will ask myself, do I really want to be doing this? I caught myself here. Now, at this point here, it's very important to begin to apply some physical self-regulation is what I call it, right? To begin to self-regulate oneself. That is to begin to, breathe deeply or, to begin to calm yourself because you need to break this physical pattern that you've been doing for however long you've been doing it. So breathing is very helpful, or things like HRV, heart rate variability, can begin to balance that kind of parasympathetic and sympathetic response. There's this kind of idea of coherence. So breathing deeply so that you have time now to insert the proper thinking. Now that I'm calm, right? Now that it doesn't feel like I'm having a fight, flight, or freeze. Once I can calm that reaction, then I can begin to do the proper thinking and do the proper correction. But if I'm very much triggered, right? If I'm triggered and I'm like, I just want to take profits, I want to take profits, there's no way I can change that behavior without first going through that self-regulation step. So breathing, right? Calming myself, and then insert the proper thinking. So why was this the correct thing to do? We talked about it already, right? Because in the long run, I'll make more money. What's the tactical correction? So what do I need to be doing tactically here now? This is the final step. What's the final tactical thing that I need to be doing so I stay on the right side of this. In this case here, it may be, okay, I'm going to follow the parabolic SAR. That's a, that's a stop loss approach. I'm just going to put my stop one tick beneath, the parabolic SAR, or whatever approach you're using, or, the lowest low, higher low, or whatever approach you may take, so that I'm staying in the, with the trend as long as possible. All right. So that was a bit of a long-winded answer, but it was a layered question. So I think it's a very good question, but it is layered, and I think it's why it trips up so many traders. So thanks for asking that question. All right. So I have a few more questions here, and I'll just keep going until we run out of questions because I'm having fun here. The next question was about the coaching program. Question was about the actual one-on-one coaching. Do I have to use all sessions concurrently? No. The one-on-one coaching, those, if you go for the +2 pack or the +4 pack, you can use those sessions anytime you'd like. So in the past, for instance, if someone buys a 4-pack session with me, you don't have to use it 4 weeks in a row or 4 sessions in a row. It's when you come up with the time that's appropriate, that you find you need mentorship or coaching, and then we can schedule time to spend 60 minutes together. Okay, good question. Next question I have here. What if I'm not? It's from Val. What if I'm not constantly having trouble getting started? Improvement. I can't be consistent in my routines for practice and preparation. I cannot be consistent in my routines for practice and preparation. So I guess the question for me, maybe I'm not getting the question, why can you not be consistent with your routines for practice and preparation? Because what I've seen in my own trading, I'll share with you with my trading, if I'm not consistent in my warm-up, then my results are inconsistent. If I'm not consistent with my cool down, then guess what? My results become inconsistent. Right? So the more consistency, the more structure we can create in our trading, the more consistency we're going to have in terms of results. Because the more new things we add, the more things we change, the more things that are constantly flying in and out of our trading, that adds a lot of unknowns, a lot of variance, right? So the more consistently we can behave, the more consistent set of outcomes we can expect. If you want to add to that question, Ball, I'll just check in here again. Okay. Okay. So the answer was, I can't even follow a process. It's like my brain is broken that you don't want to follow along. Yes, that's and it's actually not uncommon, especially if you try to do too much at once, right? I think for some people, when they see my warm up and cool down process, it's very easy to get overwhelmed. You see that and you're like, wow, that's a lot of stuff that Houston's doing there. It must take him hours to go through that, right? That warm process, I can do that in less than 15 minutes. Like I actually do that warm process when I take the train to my trading office downtown in the mornings. That's when my warm process happens, and I can do that in 15 minutes. Or if I give myself time, I can give it half an hour. But again, the key here is not to try to boil the ocean. For me, that warm process has taken years to develop, right? So in the beginning, depending on what you trade and how you trade, you may only you don't have to have all those steps, right? You probably want to keep it fairly simple in the beginning and just kind of prioritize the most important things versus trying to boil the ocean and do all those things. Because I could see that'd be very hard to follow along. So my counsel to you, Val, would be to again prioritize what things, what issues are coming up for you that are costing you either the most money, causing you the most stress, or happening the most, right? So in terms of occurrence, and find those things that are really those kind of pressure points for you, and begin to create a small process, right, with not too many steps that you could begin to follow through every single day, and add incrementally, right? Don't try to add too much at once and do that kind of boil the ocean approach. So I gave you an example before. In my trading, at any given time, I usually have 3 to 5 things that I'm working on. And as a counsel, I think that's actually That's quite a bit to be working on. For people I coach, I'd say if you really want to get pointed, focus on no more than 1 or 2 things at a time that you want to be working on. But then spend, 1 or 2 weeks on those things, and then jump off and focus on 1 or 2 new things for another 1 or 2 weeks, right? Because if you spread yourself too thin, well, you don't really have the attentional control or the attentional span to focus on those things, and you just won't be able to follow the process. So perhaps, Bob, you can begin to just be very, very specific about what you want to prioritize, and just prioritize that thing. Okay. I think we have one final question. We're getting close to our time here. I'm actually running over time, so I'll just take one more question here if I can't find any other questions that we can take here now. Yep, one final question. Can you give me a ballpark idea of your annual profit percentage and win-loss percentage progression with? I'm not sure what the final part of that question is. Let me scroll back. Great. Can you give me a ballpark idea of your annual profit and percentage win rate progression? Okay. So yeah. So for me, I use what I call R's for risk to rewards, and so that's okay. So given how much time I have, let's make it simple. So my win-loss percentage as a goal is I'm trying to get up to 80%, as I said before. That's my goal. Now I'm actually far from that right now. My winning percentage for this year, actually for the second half of the quarter, has only been this second half of the year has only been about around 55, 56%. So a little bit more than break even, or not break even, but a little more than half the time. But when I'm right, because I trade using R's, I'm typically only searching for winners that are 2 or 3 times reward to risk. So my winners are always larger than my losers. So I always like to say, like, I have 3 types of trades. I have trades where I lose a little bit. I have trades where I make a little bit. I have trades where I make a lot of money. Right? So those are the only types of trades I have. I lose a little, make a lot. That's the approach that I take, because I don't want to be taking the approach where I lose a lot, lose a little, and make a little. Right? That's kind of you're flipping over the boat there. So that's what I typically am going for. So for me, a 55% win-loss rate. I'm trying to get it up higher. I want to get to 80. I think I can do that with if I'm a lot more selective. I think I've just been trading a lot more. Like I trade a lot, so I trade on average 15, 20 times a day. So that causes my win-loss rate to kind of decrease a bit because I'm trading a lot. So my goal this past quarter has been to reduce that amount of trading and increase the win-loss percentage. Now, in terms of the actual return, my return year's not over yet, but it's nearly over. Last year I did 66% or 65% return. This year I want to get around the same ballpark again. I'm kind of tracking for that area right now. Is that kind of ballpark? And once I get, I'll share through my goals. I think I can easily get 100% return when I'm firing on all cylinders. So that's my goal for next year, 100% return on capital, and that just means that for me, the goals that I'm working on is around increasing win-loss rate, and that's how I'm gonna make it happen. Okay. All right. So, any last questions? And actually, someone said the text is cutting out. Yeah, the text is cutting out. I'm not sure why that is. What were some key things that led to positive step changes? A great question. I think I always say this, right? I don't think there was any kind of revolutionary moments that turned around my trading. When I went from in no man's land to kind of setting the ship straight. It was just more of an evolution of my trading. If we just take it back to this conscious competence model, I think just for a long time I just didn't have the right learning strategies. And I didn't want to accept the lessons and kind of be humble about things and realize, I do have weaknesses. but those weaknesses can become strengths, right? So some things I was really bad at before, they're actually becoming some of my strengths now. Like when I first started trading, I was, an emotional basket case. It's very, very impulsive. I was very emotional when I traded. In fact, now, with a lot of work, cultivation of, I think I've spoken to you in the past, some of that's about, my meditation practices and some of the things that I do to cultivate that kind of detachment in myself. That has become one of my strengths now. Like in the group of traders that I trade with, I trade in a group with several other professional traders. I'm probably one of the calmest there. And, they often ask, how did oh, you're so calm. And I tell them, I wasn't always this way, right? I wasn't always this way. It was, it's cultivated. It wasn't always this way. So that's, I would just say, just continue to take the lessons that the marketplace is giving you. It's an amazing self-development tool. Okay, and final question, and this is from Ball, but it's a question more around purchasing the program. So maybe I'll take it offline with you, Ball. I don't think everyone needs to understand these small details of purchasing. So I'll just text you privately. We can go through that. All right, so just do one final flip through the Q&A. I think that's everything for now. If I miss anything, I'll text you directly if I found something that I did not answer on the call today. But that appears to be it. Again, it was great, everyone, to get a chance to speak to you today. I appreciate you spending the extra half an hour with me and going through Q&A and some of the other parts of the presentation. So I wish you all a fantastic day. Have a great trading day tomorrow if you're trading. If not, enjoy the weekend, and I look forward to talking with you again soon. Happy trading. Take care, folks.